Welcome to the 13F Analytics tool on FinRadar.ai. This is where institutional money meets transparency and where smart traders discover what the big funds are actually doing with their billions. Today I'll show you how to navigate this powerful database of over 13,000 securities and turn institutional filing data into actionable trading intelligence. Let's dive in. At the top of your screen, you'll see our key metrics panel. This is your pulse check on institutional reporting. Notice the previous deadline. That's when funds had to report their positions. There's a 45-day delay built into the system, so we're always looking at slightly historical data. But here's the thing, institutional positioning doesn't change overnight. These are massive ships that take time to turn. The total funds field shows we're tracking over 8,000 institutional investors. That's serious coverage. Note that funds start filing after a quarter has ended and have roughly about 45 days from the quarter end before they have to file. Since the current quarter has not ended yet, it would end at the end of September. All we are seeing now are the filings from the previous quarter ending in June 2025. You can guess that by looking at the percentage of funds that have already filed, 99.63%. Once the current quarter we are in ends, that is, end of September 2025, funds could start filing the new quarter's holdings. You'd know that from that incomplete quarter box and from the percentage of funds that have currently filed, which will reset to 0%. Once that begins, you could start taking a sneak peek at what the new filings are holding in aggregate by clicking on the incomplete quarter area. Since the current quarter has not ended yet, you can see that there is no incomplete quarter data. Let's talk about finding exactly what you need in this ocean of data. Start with the search box. Type any ticker, company name, or even sector. Want to see what institutions are doing with quantum stocks? Type quantum and boom, instant filtering across thousands of securities. Now check out these category filters. The sector dropdown gives you all major market sectors. Select technology and watch the industry dropdown populate with subcategories. This hierarchical filtering lets you zoom from macro themes down to specific niches in seconds. Here's a pro feature, the ETF toggle. Sometimes you want pure equity plays without the noise of ETFs and derivatives. One click on exclude ETFs/derivatives and you're looking at pure company stocks. Or flip it around, select only ETFs to see where institutional money is making broad sector bets. Now we're getting into the real power tools. Let's start with market caps. Drag that slider and you're not just filtering by dollar amounts, you're filtering by relative size. Want to find mid-cap gems that institutions are accumulating? Use the slide bar to remove large cap stocks. As for the total value slider, it refers to the total dollar amount held in a particular stock by all funds combined. The float slider helps you filter out stocks with little liquidity if you are a large investor or fund. Or just the opposite. If you are trying to find the tiny companies that could run fast, then that could be your focus area. But here's where it gets interesting, the fund flow slider. This shows actual dollars moving in and out. Slide it to the top 20% and you're looking at stocks with the heaviest institutional buying. These aren't suggestions, these are actual billions being deployed. Another pro tool to find those hidden small gems is to use the fund flow relative to the market cap percent slider. Assume a company with a market cap of 50 million saw an inflow of $25 million. That would be an inflow worth 50% of the company's market cap. And you can find those in a click of a button. Watch this. Combine fund flow with share change percent. Set both to positive territory and you've just identified stocks that have seen dollar inflows but also where the total number of shares has increased by an X percentage point. Now, want to make sure that all that new money is not coming from a single hedge fund or institution? Increase the fund change slider up to select those stocks where the total number of funds invested is on the rise. That's conviction with capital behind it. Another helpful slider is the first traded filter at the bottom. Perfect for separating battle-tested companies from recent IPOs. Institutions often wait 6 to 12 months before taking major positions in new listings. Use this to weed out new IPOs. Now to the table. Every column in this table tells a story. Let me decode the important ones. Share change. Raw number of shares added or removed by all institutions combined. Big numbers here mean coordinated institutional movement. Fund count. How many institutions own this stock? Higher numbers mean broader institutional endorsement. When this jumps significantly quarter over quarter, institutions are discovering something. Fund change percent. This is momentum. A 100% increase means that the total number of funds that have just reported owning the stock have doubled since the previous quarter. That's not random, that's a rise in institutional interest, and it often precedes major moves. Click any column header to sort. Want to find the biggest institutional dumps? Sort by share change percent ascending and look at the top selection. These are stocks institutions are abandoning en masse. Now be careful, sometimes you'd notice a contradiction with the same stock showing up twice, with one row showing heavy loading and another row showing massive exodus. This is likely a glitch reflective of a change in the CUSIP number of the company, as it shows that all funds no longer hold the old CUSIP from the previous quarter and are now reporting owning the new CUSIP. So when you find an interesting idea, always double check that the ticker is not listed twice, and that the high share dump or share loading is not actually a glitch caused by a change in the CUSIP number. This usually happens during a material corporate change that forces the company to change its identification number known as the CUSIP number. Here's a hidden gem, the Funds with New Buy column. If you can't see it, go to the column selection tool in the filter section and make sure it is checked. High numbers here indicate fresh institutional interest. These funds did their homework and decided now was the time to initiate positions. Now here are some quick power moves to maximize this tool. First, always check the percentage columns, not just absolute numbers. A 100% increase in fund ownership on a small cap is often more significant than a 5% increase on Apple. Second, combine multiple filters. Single filters find stocks. Combined filters find opportunities. Use at least 3 filters together for surgical precision. Third, pay attention to the fund flow relative to market cap percent. This normalizes the data. A $50 million inflow means nothing to Microsoft, but it's massive for a $500 million company. To conclude, remember, institutions report quarterly with a 45-day delay. You're not getting yesterday's moves. You're seeing strategic positioning from the world's smartest money managers. They're playing chess while most retail traders play checkers. The 13F Analytics tool transforms regulatory filings into your competitive edge. You're not following tips or rumors. You're following billions of dollars of institutional conviction. Every quarter, over 8,000 funds reveal their portfolios. This tool puts that intelligence at your fingertips. Use it to spot trends before they hit mainstream financial media, identify sectors under accumulation, and discover which stocks the smart money is quietly positioning in. Remember, institutions don't trade on emotion. When they move with research, conviction, and massive capital. Now you can see exactly where they're moving. Start with broad filters, narrow down to specific opportunities, and always verify with your own research. This is institutional intelligence. Use it wisely. Happy hunting at finradar.ai, and may the trades be in your favor.